Okay, hello everyone. This is Starhill Global REIT's first half FY 23-24 financial results dated 29 January 2024. Right, we'll just go through the key ideas. Right, it's mainly a retail REIT with 85% of their revenue coming from the retail side and the remaining 15% coming from office. Right, YTL Group is the owner or sponsor rather, and it owns quite a lot of the REIT, 38%. Right, the master and anchor leases are quite a significant amount, which is 52% of the gross rent. Right, occupancy is very high at 98.7%, which is great. Right, gearing is 36.8%. Right, we'll have a look at this with greater depth later and try to include the perpetual securities. Right, so revenue is down marginally, net property income also up marginally, distributable income down 2.2%. Right, if I analyze this, because this for half a year, right, this for half a year, right, it will be 3.56 cents annualized, right, and this will give me a 7.34% dividend yield, right, based off the current share price as of this recording, which I believe to be 48.5 cents, right. So to me, this yield is quite decent for this REIT, right, given its gearing, right, even with perpetual securities later, as we'll see, right. So the gearing is 36.8%, right, and the hedge interest rates are at 78%. Right, so we'll look at why NPI rose, right, mainly due to Singapore properties, which I think is their cornerstone properties, right, and Myanmar Center Adelaide retail, right, and is partially offset by depreciation of foreign currencies, which is not unusual. The SGD has been strong against other currencies, and the loss of income from the Japanese properties they divested, right. So the DPU has dropped because of higher financial costs and a one-off leasing fee in relation to the master lease renewal with Toshin Development Singapore Private Limited, right. So this is one of their significant master leases, right. So occupancy is high, right, but what's quite interesting about this REIT is the tenant sales is percentage increase is higher than the shopper traffic, right. So normally in other REITs you can see the tenant sales percentage is up pretty small percentage as opposed to the shopper traffic lah. You can see some REITs is like tenant sales is up 1 to 2%, shopper traffic is up 10%, but for Wisma Atria, tenant sales is actually higher than shopper traffic, maybe because stuff there are expensive lah. I guess that's my best guess for what's going on, right. So if we look at CICT, right, even the downtown REITs, if I remember the numbers, were tenant sales were up 10% and shopper traffic were up 20%. So the shopper traffic is actually more than tenant sales. And I think for Wisma, they tend to attract a more overseas affluent crowd. That's my thinking lah. Okay, so hopefully if the tourism from China comes back, this number can get better. Alright, but yeah, that's a big question mark. We don't know about. Anyway, moving on, right, if we look at Wisma basement scheduled to be completed soon in March 2024, and of course the phase 2 works in Myanmar Center Adelaide is estimated to be finished in February, right. So this should increase shopper traffic and sales as well, right. So we have a look at the gearing, 36.8%, right, because they actually have perpetual securities as well. So I did a calculation here, right. So they are very nice to give us their latest balance sheet, which is on 31st December 2023. So what I did was I tried to replicate how they get 36.8% gearing lah. Since they are able to report this as their gearing, right, my assumption is MAS allow them to look at their liabilities this way. So we cannot take the total liabilities divided by the total assets, because that will literally bust this figure and it'll be quite high above this figure, right. To be able to get the 36.8%, we actually have to only input some figures like this one, right. Derivative financial instruments, borrowings, derivative financial instruments here, income tax payable, and borrowing. So I included these 5 ticks and I excluded the excess, right. And when I sum the 5 ticks, right, I actually get a figure of 1047069, right, which clearly is a smaller number than this lah. Then I divided by the assets, which is taken from this number over here, and that actually gives me 36.8%, right. Whether this is the correct and conservative way to calculate your gearing ratio is, in my opinion, a bit open to interpretation, because my take is always or rather it's not my take lah. It's something I learned from this professor called Damodaran, right? So he said that it's always about incentives, right? If a company is reporting their balance sheet, they will try and make it look as good as possible. So they will try and make gearing look as good as possible. So if you are a buyer of the stock, for example, you may want to include other things that you feel are actually necessary to include in the numerator, right, which may make the gearing higher. But anyway, we are following this so that we can get the number that they reported, 36.8%, right? So I just summed the 5 ticks over here, right? What I did was I recalculated the gearing with perps, right? So their perps is this number here, 99629, right? So I took this number, I summed to this number over here, then I divide by the same denominator, which is still total assets, right? So I'll get a gearing of 40.2%. So you can see that it's not too bad lah, alright, even if I put perps inside, right, to make to get a more reasonable estimate for gearing, right, even with perps inside is 40.2%, which is quite reasonable, right? Okay, so we go back to the slides, alright. I don't think I will say too much more. I more or less covered all the things I wanted to cover. Mainly you can see that the parts that are more important are Singapore, right, then followed by Australia, right, and Malaysia, right, and Malaysia and others, the others part is quite badly underperforming, but thankfully the size is very small lah. Okay, so yeah, with that I don't think I will cover too much more. Alright, thank you for your time.